Hey everybody, welcome back to The Mortgage Mindset. My name is 𝗝𝘃𝗀𝗏𝗀𝗏, multiple state licensed mortgage advisor in Las Vegas, Nevada with Streamline Home Loans. And today I've got an incredibly special guest for you, Jason Griggs of 𝗝𝘀cznie Vegas Real Estate. This man is really a master of rental properties, short-term, long-term, whatever you need. I've been having a ton of clients calling me up lately that have been fix and flippers. They find themselves in a really precarious position with the shift in the market. They're stuck in hard money loans and they're just hemorrhaging money on the properties. Buyers are coming in on the properties and asking for significant seller concessions just to get into contract, which, as you know, dramatically eats into that profit margin on the flip. So what can you do? So I have my guest here. He's going to tell you a little bit about some tools and some tricks that could probably help you shift your strategy a little bit. Welcome, Jay.
Well, thanks for having me on, man. Excited to talk to you about this.
So why don't you tell me a little bit about what you do and kind of how you got started? People get to know you a little bit.
Yeah, so I moved to Vegas about 13 years ago now, and I was a teacher at first, but then I got into real estate. I started coaching a local lacrosse team here, and just through the network of the parents, got into real estate, became an agent, but I just dove heavily into investing in real estate here. Bought a lot of rental properties, and now I'm just helping other real estate professionals like yourself just learn the process of buying rentals and learning how to build some wealth.
Nice. So let me ask you, when you first got started, with that strategy, dipping your toes into real estate and picking up rental properties, were you doing that on your own, or did you find someone that could mentor you?
Yeah, so I bought my first house, and I think that's first step one. If you're going to invest in real estate, you want to buy your own house first. That's so just so you could learn the process of it. But to answer your question, no, I didn't do it by myself. I had a partner. So I had a mentor in New York, my cousin Joe, and he's the one who really gave me the push to move to Vegas. And it's so expensive in New York where I'm from. So he kind of showed me what we're going to do. We're going to buy a property, we're going to fix it up a little bit, and then just rent it out. That's what we did.
Very good. What part of New York are you from?
I'm from Long Island, New York.
Okay.
Yeah.
How long have you been here now?
13 years.
Will you ever go back?
Yep. No. Not even close.
Is it the weather?
It's a big factor for me, yeah, and the fun.
Yeah. Everybody that I talk to, all of my friends that are from New York that live here now, they're like, I can't go back, man. I don't miss the snow. I'll go back for holidays to see the family, but other than that.
No, I love Vegas. It's just a fun town. There's so much to do. The football team, the hockey team, and this real estate market is turned into like a powerhouse market across the country. And so I got into it when it was it wasn't like a big boy market yet. Then it exploded into one, which is amazing to be a part of.
Were you part of that big boy explosion?
I was, I think. I bought, I would say 20% of my rentals in the very beginning. So I bought them in like 2015. And at that time, real estate wasn't what it is now here. There weren't $20 million houses in McDonald Ranch yet. Mm-hmm. There wasn't a Sky yet. There wasn't the Summit yet. Ridges was just kind of taking off. So I would say, yeah, I got in an amazing time.
Awesome. So let's talk a little bit about fast forward to today. I have legitimately been getting phone calls from concerned investors, and their primary business strategy was the fix and flip market. Mm-hmm. And as you know, they use hard money to acquire the property. They'll do their renovations. They have a certain idea of the profit margin that they're going to be able to achieve because of the after repair value. But we're seeing property values slowly start to trickle down and eat into those profits. So what can you do?
So I'll say this, the business that I'm in, I'm a real estate agent, and then my end goal and my goal every day is to invest in real estate. And so I buy rental properties and I hold them for the long run. I don't sell rentals. I do some flips occasionally, and then I take that profit from flipping and I use that for my personal funds to buy more rental properties. So I never liked the rental model. The flipping model, because you're so reliant on so many different things. You're relying on the market. You're relying on the borrowing of money. And now when you see an adjustment to the market, it can really throw things upside down. And so you add in all those factors, construction factors, and it's just a very hard business to sustain. So my business is opposite, where I'm just buying a property, sitting on it, renting it, and letting it go forever. And I think my model is a lot safer and it's a lot easier to run. And so I'm kind of educating people on that right now. Now, to answer your question with the flipper, what's happening with the flippers is they always over leverage themselves. They have to go out and borrow a lot of money and take out hard money loans, and they have to get construction lines of credit. And then they go out and buy 20 houses, 10 houses, 5 houses at a time, hoping that they could put some renovation money into it and then sell it for a higher price that they bought it for. But what's happening now? I don't think we're in any type of crash at all, but the word I'm using is realistic. Like the market is becoming more realistic. And I use the eye and stomach test. Like when you go out and look at a property, you have to feel that property is worth the price. And last summer, I was going to some houses and I was like, this house isn't worth $1 million. It's just a normal tract home. It doesn't even have a pool and it's in a nice area. And I understand the appreciation and inflation brought it to that, but I'm kind of excited now that we're getting into a more sustainable market. And I'm sure you had clients last year where they wanted to go buy a house, but they couldn't. There was 50 offers on every single house. You were asking your clients to put $100,000 over asking on every offer, and it's just not a realistic thing to sustain for clients or professionals in the market.
So let me ask you, with that information, right, are you eagerly excited about the potential market that we're moving into just because of the shift that we're in?
Yeah, I am, and here's why. As a real estate investor, you make money by buying real estate. And so last summer, and I'm just going to use the last year and a half, I had difficulty buying real estate. And so now real estate is going to go on sale. And when things are on sale, you buy. Just like when you go to Black Friday, the day after Thanksgiving, everyone rushes to go buy on sale. It's weird though, because with the real estate market, it's kind of the opposite. When things go on sale, people kind of get a little skeptical. They're like, oh, something bad's going to happen.
Yeah.
But it's proven over time, rental real estate works. And the biggest, most important factor is you just don't want to over leverage yourself. You can't go put all your money and spread yourself so thin. You got to make sure you have some meat on the bone, meaning that you have some equity in the property and that you're able to rent the property for more than the mortgage payment.
Okay. So what's on the horizon for you then?
I am going to, what I've fallen into now is the education model of teaching professionals like yourself and other realtors of how to buy rental real estate, why it's an amazing thing in my opinion.
Everybody wants to know. Everybody wants to learn it, right?
Everyone wants to learn it, and they should want to learn it because it's a great way to build wealth and set yourself up for your future. But what I'm noticing in the past 3 months is a lot of flippers are finding themselves in trouble. They've bought too many properties. They're kind of bleeding out their profits because they can't sell them for the prices that they thought they could sell them for.
Right.
So they're going to have to make a decision of, do I either rent this thing or do I sell it for a loss? And nobody wants to sell anything for a loss, so they're just going to have to hang on to them for the ride.
So you have strategies in place for them. You have educational resources in place for them to help them in that journey, right? To make that transition from whatever their previous business model was to let's look at holding on to these properties, especially the ones that are in desirable geographic locations that are going to rent properly, right?
Yeah, and I'll just touch on the flipping model. I've learned a lot about their business. When people buy a house to flip, they have kind of one set strategy. We're going to buy this, we're going to put money into it to fix it, and then we're going to sell it. They don't think about step 2 or step 3 of, I might need to hold this property just in case the market adjusts, which is what's happening now. So what I'm educating people on is how to refinance these properties. You need to be able to get this into a type of loan, a DSCR loan, which is a rental property loan, and you need to be able to sustain a rental model now since you can't sell this thing. And so I can help with that, with teaching you what type of property would work for a long-term rental versus what type of property would work for a short-term rental, which is the big Airbnb topics that goes on in Las Vegas is one of the hottest short-term rental markets in the country.
Right now we are?
Yes.
I didn't know that.
Yes, it is.
Wow.
It's probably in the top 3 most profitable because we have very low taxes here. So if you go to other parts of the country, their taxes are higher and it eats into a lot of your profit. But the big reason is this is the #1 tourism place in the world.
Right.
And it's getting more and more attractive as time goes on.
Yeah, I mean, we get more professional sports organizations that are coming here. I think I saw there's so much that's happening in Las Vegas, right, for expansion. So people are just going to keep wanting to flock here, right?
I couldn't agree more with that. And you can just see it. I mean, I'm in the business, and it's just amazing how many different types of people are coming here. It's just not strip tourism anymore. Vegas is becoming more of a family centralized visiting place where you could bring your family and go to the Golden Knights game. You could go to the Raider game.
Yeah.
All these new shows that are coming, all these new casinos, all these new, just everything in general.
Yeah.
And so what I'm seeing happen is all this tourism that's happening is turning those people who are visiting, and it's putting a bug in their brain like, I like it here. Maybe I'll move here.
Yeah.
I don't want to go spend a lot of money in California anymore. I don't want to deal with the politics in California anymore. And it's only 2.5 hours away. And so I'm seeing a lot of people just give up on being a New Yorker anymore, being in California. They're just done with the BS. And so that's good for us. It's good. It's good, healthy transition.
That's awesome. So let's circle back a little bit to what you were talking about on the type of financing structure that you use, right?
Mm-hmm.
So, a lot of fix and flippers are using hard money specifically to acquire the property and then also to cover the renovation expenses on there. But then how do they make that transition out of that into something that's going to be a longer term hold?
Right. So we'll just go through what hard money is. So when you take out hard money, you're paying interest only payments, which means that money is not going towards the principal buy down of the property.
Yep.
And so we'll use an example. If I buy a $300,000 house and I have to pay $4,000 a month, and for 5 months, all that money goes to the loan company. It doesn't go down to buying down your principal and the cost of the house anymore.
So you firmly believe in using P&I, principal and interest type loans, so that rental money that's coming in is reducing the principal balance.
I'm the biggest like hater, anti of interest only, because when you buy real estate, the whole goal is you want to pay it off as fast as you possibly can, at least for me. So I try to pay off my properties very quickly. Here's why. If I have 5 properties and I own them all, and the real estate market crashes tomorrow, it doesn't matter. I'm still renting it out. Will the rents adjust? Yes, they may, but typically no. They adjust very little. But if you go buy a $400,000 house and you go upside down, people freak out. You can't sell it, so you're kind of stuck. So that's my model. I try to, and I'm trying to educate more people on this. I try to pay off as many rentals as I can as fast as I can.
Okay. I love it, man. So as always, I appreciate everyone tuning in to the show. I can definitely help you in the transition, getting out of those interest-only hard money loans, moving them over to a loan like a DSCR loan, which is beautiful because it requires no income documentation. And if we go through certain investors, it won't even report on your personal credit. You can close in the LLC. Everything will be under the business EIN. So that's one thing that we were discussing last week, right? We talked about that.
I mean, once I got into DSCR loans, got into these things, I realized that you could go borrow as many properties as you want. There's no limit, which is amazing. And with Fannie and Freddie, you can only borrow, 8?
The max is 10.
The max is 10.
Correct.
So I have way more than 10. So if I was just limited to that,
I gotta come in here and flex on everybody. I got way more than 10. No,
no, I mean, it's a really, for somebody like me, I was just a normal guy, but I learned this business pretty well.
Yeah.
And Vegas has been an amazing market to invest in. And so I'm just going to keep rolling with it.
One last question before we let you go.
Sure.
Portfolio goals. How many properties when you retire do you want to have in the portfolio?
I'm not going by how many I need. I'm going by, I think, a dollar figure.
Okay.
A certain dollar figure where I could live comfortably for the rest of my life, or not waking up and going to work anymore.
When you say dollar figure, is that a monthly generated income from the rent rolls?
Yes. So let's say I have 15 houses that are paid off, and that's bringing me in $30,000 a month. I could comfortably live off $30,000 a month for the rest of my life. Nobody can go take my properties. They'll always be rented out. And I'll always have, in the back of my mind, if I need to sell those for any type of reason, I can. But you look at the richest people in this world, and they just own a lot of real estate. They own either single family rentals or commercial buildings or these big apartment buildings. And so that's just a way to create wealth in my family.
Well, and you're talking about tax strategy on top of that, right? Like depreciation, but that's a whole nother subject.
That's a whole nother ballgame. So I would just suggest, if you're kind of in this situation of you have these properties, you don't know what to do with it, I've become an expert with creative financing, of just structuring these real estate deals and just teaching you how to run and operate short-term rentals and long-term rentals.
That's awesome, bro. I appreciate you coming on. I'm really looking forward to continuing to learn from you. And then, if anybody wants to reach out, they need help, they need some guidance, tell people where they can find you. Give them your Instagram handles. Tell them where they can find you on social.
Okay, so my Instagram is @JGriggsRealEstate, and I created a program. It's called Win with Airbnb.com, and that will go through the entire start to finish of buying your first short-term rental property, what to look for. And a lot of people don't even know that you could short-term rental your own house. You could do rooms in your house to create extra income during this kind of downturn.
Okay, and what's the big thing at the end of that program?
The big thing that you'll be able to accomplish is just learning the business. And so I hear it a lot. I want to go buy an Airbnb property, but you need to learn the business. It's not just buying a house. You're building a business with that house.
And then they also get one-on-one time with you as well, correct?
Yes. So once you finish, I sit down, we do a consultation of how we can help you. And if you need to go find a house, that's something I can help you with. But it's pretty cool because I'm helping people all across the country, and I'm just learning different markets.
That's awesome, man. Yeah. Well, again, I'm super appreciative of you coming on the show. Definitely going to have you back once we have, a little bit of momentum. We're working on a bunch of different stuff. We got some projects in the works for you guys, so we will definitely be back.
Thank you.